Yesterday, one single news report wiped out billions of dollars in less than 24 hours. Not a war, not a natural disaster, not even a company going bankrupt. One report, about one machine, from one Chinese company most people had never heard of before yesterday morning. By the time trading closed, South Korea's entire stock market had been halted multiple times. Samsung had lost over 13% of its value in a single session. And one of the most powerful chip-making monopolies in the world had just watched its 10-year moat get punched straight through. Here's exactly what that machine is, why it terrified investors on 3 continents in a matter of hours, and why this might be the single most important chip story of 2026 that almost nobody outside the industry saw coming. Before we go further, if you want to actually understand what just happened instead of just seeing the scary headline, hit subscribe right now, because I'm about to walk you through exactly how one machine did this much damage. Here's the headline version. On July 28, 2026, a report from the tech publication The Information revealed that a Chinese state-backed company had begun mass production of homegrown deep ultraviolet lithography machines, DUV machines for short. These are the specialized tools used to print microscopic circuit patterns onto silicon wafers. And until this week, that entire category of advanced chip-making equipment had one dominant global supplier: the Dutch company ASML. Within hours of that report going public, South Korea's benchmark Kospi index collapsed more than 11%, its sharpest single-day decline in recent memory, triggering a trading halt as the speed of the sell-off overwhelmed the exchange's own circuit breakers. Samsung Electronics dropped over 13%. SK Hynix fell nearly 15%. With its US-listed shares closing below their own IPO price. ASML itself had already lost more than 8% the day before, the moment the report first surfaced. This wasn't confined to Korea either. Japan's Tokyo Electron fell nearly 11%. Kioxia plunged over 18%, and even mainland China's own tech-heavy Chinext index dropped more than 6%. One machine. One report. A chip industry earthquake felt from Seoul to Amsterdam in under 48 hours. To understand why a single piece of factory equipment can crash markets on this scale, you have to understand just how absolute ASML's monopoly on this technology has been for the last 2 decades. Every advanced chip in the world, the processor in your phone, the memory in your laptop, the AI accelerators powering every major data center on Earth, starts life as a blank silicon wafer. To turn that blank wafer into a working chip, manufacturers need to print incredibly precise circuit patterns onto it, using a process called photolithography. Think of it like an extraordinarily precise stencil, projecting light through a mask to carve patterns thousands of times thinner than a human hair, layer after layer, until a functioning chip emerges. DUV lithography machines are the workhorses that do this for the vast majority of chips manufactured globally. Not quite the absolute cutting edge of EUV machines used for the most advanced logic chips, but still the essential backbone equipment for memory chips, mainstream logic chips, and the bulk of what actually gets manufactured at scale worldwide. For over 20 years, ASML has been essentially the only serious global supplier capable of building these machines at the precision and reliability the chip industry demands. That's not an exaggeration for dramatic effect. It's a genuine structural monopoly, built on decades of accumulated engineering knowledge that no other company on Earth had managed to replicate at commercial scale. Every major chipmaker, Samsung, SK Hynix, TSMC, Intel, Micron, and yes, Chinese manufacturers too, has depended on ASML's machines to actually build their products. That dependency became a geopolitical weapon in recent years, as the United States pressured the Netherlands to restrict ASML from selling its most advanced machines to Chinese chipmakers, specifically to slow down China's semiconductor progress. Now picture what changes the instant that monopoly cracks. According to the report that triggered yesterday's collapse, a Chinese state-backed firm called Yuliansheng Tech has begun producing its own immersion DUV lithography machines domestically, precisely the category of equipment the West has spent years trying to keep out of Chinese hands. Reports citing industry analysts say the company plans to produce 5 of these machines this year, scaling up to 20 next year, with deliveries already lined up for major Chinese chip makers, including SMIC, CXMT, and Huahong. That's not a research paper. That's not a lab prototype. That's an actual production and delivery pipeline, aimed directly at the companies at the center of China's entire chip strategy. But here's the question that actually explains why investors panicked this hard, this fast. Because a chip machine, by itself, shouldn't be able to erase over $100 billion of market value in a single trading session. So what does this machine actually threaten that's worth that much? Let's be precise about what actually happened here, and what didn't, because both the panic and the dismissal are missing pieces of the real picture. What genuinely happened? A credible, well-sourced report confirmed that China has moved from talking about domestic DUV lithography to actually mass-producing it, with real delivery contracts to real chip makers. That is a meaningful milestone. For years, China building its own lithography machines was treated by much of the industry as a distant, maybe someday problem, not something already shipping in 2026. Yesterday's report collapsed that timeline, in the eyes of investors, from eventually to happening right now. What didn't happen? China did not suddenly leapfrog ASML's most advanced technology. These are DUV machines, not the cutting-edge EUV machines still needed for the most advanced logic chips powering flagship smartphone processors and top-tier AI accelerators. Bank of America, in comments following the sell-off, specifically characterized this as a modest threat to ASML's core high-end business rather than an existential one. Standard Chartered's chief investment officer for equities acknowledged the sell-off reflected a genuine deterioration in sentiment, but argued the long-term picture hadn't fundamentally changed, that the market opportunity remains large enough for multiple players to coexist. So here's the honest scoreboard. ASML still dominates the most advanced tier of lithography technology, the EUV machines nobody else on Earth can currently build. But for the enormous, high-volume tier below that, the DUV machines that build the bulk of the world's memory chips and mainstream logic chips, China just proved it no longer needs to buy that equipment from anyone else. And that distinction matters enormously for Samsung and SK Hynix specifically, because memory chips, their entire core business, are built overwhelmingly on exactly this tier of equipment. But here's why the panic wasn't irrational, even if it was arguably overblown in the short term. Because this wasn't really a story about one machine. It's a story about what happens to Samsung and SK Hynix's entire competitive advantage once their most dangerous competitor no longer needs their supplier's permission to keep manufacturing. Because Samsung and SK Hynix's stock prices haven't just been climbing on strong earnings this year. They've been climbing on a very specific bet about who controls the world's memory chip supply. And yesterday that bet just got a lot shakier. Here's the layer that explains the sheer size of the sell-off, and it connects directly to a trend that's been building for most of 2026. This year has seen an extraordinary AI-driven memory chip boom. The Kospi itself was up more than 90% for the year before yesterday's crash, driven almost entirely by explosive demand for the high-bandwidth memory chips that power AI data centers. with Samsung and SK Hynix sitting at the very center of that boom as two of the world's dominant memory suppliers. Their stock prices weren't just reflecting current earnings. They were pricing in years of assumed dominance in a market with limited serious competition. China's domestic memory makers, companies like CXMT and YMTC, have already been chipping away at the low end of that market throughout 2026, flooding the legacy DDR4 market with chips priced at roughly half the going rate, expanding wafer capacity aggressively, and even beginning to convert production toward more advanced HBM3 class chips aimed at AI data centers. A Samsung advisor publicly warned earlier this year that China's rapid chip-making expansion threatens to weigh on the entire AI memory chip boom. Until yesterday, though, that expansion still depended heavily on equipment bought from the same Western and Japanese suppliers Samsung and SK Hynix also rely on. A shared bottleneck that kept the playing field at least somewhat level. Yuliansheng Tech's domestic DUV machines threaten to remove that shared bottleneck entirely. If Chinese memory makers can scale production using homegrown lithography tools, free from export restrictions, free from supply constraints tied to geopolitics, their ability to keep undercutting global memory prices and expanding capacity accelerates dramatically. That's the real number investors were reacting to yesterday. Not the existence of one new machine, but the realization that the single biggest structural advantage propping up Samsung and SK Hynix's dominance, restricted competitor access to essential manufacturing equipment, just took a serious hit. And there's a broader pattern worth naming here, because this is far from an isolated incident. This is the same story we've now watched play out across battery technology, solar panel manufacturing, electric vehicles, and telecom equipment. Identify a category where Western or allied companies hold a critical technology advantage. Pour sustained, state-backed investment into closing that specific gap, and move fast enough that by the time markets notice, the gap is already smaller than anyone had priced in. Chip-making equipment, arguably the most heavily protected technology category of the entire US-China tech rivalry, just became the latest addition to that list. So where does this actually go from here? Because the reaction from ASML, from Western policymakers, and from the broader chip industry over the next few months is going to say a lot about how seriously this threat is actually being taken. In the immediate term, expect intense scrutiny on Yuliansheng Tech's actual production numbers. 5 machines this year, 20 next year, according to reports citing industry analysts. Those numbers need to be verified against real shipments and real performance benchmarks over the coming months, because production announcements and actual reliable output at scale are two very different things in the semiconductor equipment business. ASML didn't become a monopoly by accident. Building lithography machines that work correctly, consistently, at commercial precision is one of the hardest manufacturing challenges in the world, and China's DUV machines will need to prove themselves in real production runs at SMIC, CXMT, and Huahong before this threat is fully confirmed rather than feared. Expect Western policymakers to respond too. Given how aggressively the US has pushed export controls specifically to prevent this exact scenario, a confirmed domestic Chinese DUV supply chain is likely to trigger renewed debate in Washington about tightening controls even further, potentially targeting the components and materials that feed into machines like Yuliansheng's, rather than just the finished lithography tools themselves. And watch Samsung and SK Hynix's own strategic response closely. Samsung has already been racing to ramp up next-generation HBM4 production for NVIDIA's newest AI accelerators, betting that staying at the absolute cutting edge of memory performance rather than competing on price against cheaper Chinese alternatives is its strongest long-term defense. If Chinese manufacturers close the equipment gap on legacy and mid-tier memory chips, while Samsung and SK Hynix keep their lead concentrated at the highest performance tier, the industry could split into two increasingly separate competitive lanes. One where China dominates on cost and volume, and one where Korean and American firms defend a shrinking but still highly lucrative high-end frontier. So let's put this all together, because both the "this changes everything overnight" panic and the "this is nothing, calm down" dismissal are missing the real significance of yesterday. The panicked take. China just broke ASML's monopoly, and the West has lost its chip advantage. Overstates what actually happened. These are DUV machines, not EUV. ASML's grip on the most advanced lithography technology on Earth remains intact, and Bank of America's own assessment called this a modest threat to ASML's core business, not a fatal one. But the dismissive take, it's just one report, markets overreacted, nothing fundamentally changed, misses what actually justified the fear. For years, China's path to domestic lithography independence was treated by most of the industry as a distant hypothetical. Yesterday, a credible report with named delivery targets, SMIC, CXMT, Huahong, collapsed that timeline into the present tense. Markets don't crash 11% over hypotheticals. They crash that hard when a risk that was priced as eventually, maybe, suddenly gets repriced as already happening. That's the real headline underneath the chaotic headlines from yesterday. China didn't just build one machine. It demonstrated that the West's most carefully protected technology choke point, the equipment monopoly export controls were specifically designed to preserve, has a real working crack in it, at exactly the tier of the market where Samsung and SK Hynix make the bulk of their money. The most advanced frontier is still secure. The much larger, much more lucrative mainstream memory market underneath it just got a lot more contested, virtually overnight. Let's bring this together. On July 28, 2026, a report confirming that Chinese firm Yuliansheng Tech has begun mass-producing domestic deep ultraviolet lithography machines, with real delivery plans to SMIC, CXMT, and Huahong, triggered an 11% single-day collapse in South Korea's Kospi index, wiped over 13% off Samsung Electronics, nearly 15% off SK Hynix, and sent shockwaves through chip stocks from Tokyo to Amsterdam. This doesn't mean China has caught up to ASML's most advanced technology. It means China no longer needs anyone's permission to keep building the mainstream memory chips that make up the core of Samsung and SK Hynix's entire business. Let's run through the numbers one more time, because together, they tell the real story. 11%. How far South Korea's entire stock market fell in a single session. 13%. How much Samsung lost. Nearly 15%. How much SK Hynix lost. 5 machines this year, 20 next year. Yuliansheng Tech's stated production plan. 0. The number of export licenses China needed to build any of them. Individually, these are just numbers about one company's factory output. Together, they describe the exact moment global markets realized the West's most carefully guarded chip advantage just got a lot more fragile than anyone had priced in. If this video actually helped you understand what happened yesterday, not the panicked version, not the dismissive version, but the real mechanics and the real stakes, hit subscribe. Because I'm going to keep tracking exactly how ASML, Samsung, and Washington respond to this over the coming weeks. And you don't want to miss where this goes next. Drop a comment right now with one word: cracked. If you think China's chip equipment monopoly breakthrough is as big a deal as markets reacted like it was, or overreaction, if you think investors panicked too hard on one report, I'm reading every single one. Thanks for watching. We'll see you in the next one.